Alright traders, I'm back again with another video, and today I'm going to take a look at what's going on in the markets. We had some news the past 2 days, non-farm payroll, US dollar, some other news going on, some pretty significant news events happening that are starting to move the market, and you can see the market's been moving for the past 2 days, and we'll take a look at that and see where we are. So that changed some of our outlook for the short term, but long term we're back on target. Just wait for the market to settle down and then get back to where we were the other days, and looking at what the market might do and has the possibility of doing. So what we're looking at right now is the US dollar Swiss franc on the monthly time frame. When there's news going on, I'm never trading. I'm pretty much out of the market. I don't trade during news time. I'm not a big fundamental guy. I'm aware of the news, and I know when it's happening, and I know when to avoid it. But what we want to look at is this US dollar Swiss franc monthly time frame. We see this level here, this blue line here. This is going to be our support level. This is a strong support level. You see the market came down and farmed that level, then it moved back up, came down. Here's where we farmed that level. 2 months on that level, 3 months on that level. The fourth month we took off. We pulled away from it pretty hard, but then it took a little while and we came back towards it. And as we came towards it, you could see the momentum dying out, because each candle got smaller and smaller, and then we hit that market and pulled off a little bit hard again, and then we came back to it. Now when we attacked it this time, look how we attacked it over here, smaller candles, but this time there's a big candle here, bigger candle, and waiting to see what this is. If this candle can close below that level, we'll have violated that level and we'll be on our way to a short trade. Now I'm in this trade right now, and I have a risk of 87 pips, but my profit could possibly be anywhere from here to here, which would be this level here would give me 160 to 360 in this level, because this is a small support level, so it's a possibility. And then also you have this level down here where we would make a double bottom just about, so that would be um, pretty much like 1,000 pips plus if we went all the way down to this level. So there's a good possibility of a good trade here. So the risk isn't that much based off of the reward that we can receive. All right, so that's what we're looking at. And you could see there's some divergence in this market, because you see that the divergence with the Kijinsen, as the Kijinsen is pointing upwards while the market's coming downwards, and then your Tenkan-sen is beginning to point downwards. Not as strong as the Kijinsen's pointing upwards, but once they're pointing towards each other, a lot of times you're going to get a TK crossover, and that's what we're looking at. If we get that TK crossover, then the market's dropping down farther. All right, so that would be a good trade. Now this level may hold. It may fake us out and hold, and then attempt to go back up this way, and then that'll be long term later, looking to get through that cloud, break that level. So either way, we're sitting at a level where there could be some good opportunities. This could be immediate, and then if not, you could see something down the horizon here. All right, so let's take this to the daily time frame. Look at that, and let's take this way out real far so you could see that level, how strong that level was. That level was made in February of 2012. This support level was made in February of 2012. A year later, it came back and attacked that level. So here it is. The first time it was about February 2012, February 24th, 2012, and then a year later it came back to that level. So here you are, February, attacked that level again, pulled away, and then about 8 months later we came back at it again. So now this time we come at it. You could see how strong we're coming after that level. You could see how this Kijinsen and your Tenkan-sen are pointing pretty much almost straight down. But look, when we attacked it this first time, it wasn't that steep, and then here it wasn't really steep at all, and then we really didn't even get to that level that much. But you could see how this is really showing some strong momentum to that level. Now there's a possibility that we get faked out and the market moves back up and it doesn't break this time. All right, but that's what we're looking at there. We want to go to the 4 hour time frame. That's where I entered the market, on the 4 hour. So on the 4 hour, you could see again Here's where the good trade would have been: getting in on the break of this cloud. Kumo breakout, didn't catch it, so it formed a support level, support and resistance level as it range right here, consolidation, and then formed that fractal level low, fractal level high. But then it broke that level, and when it broke that level, it broke the previous week low, broke that level. But then you see this long wick candle. You have to play by your rules, but you see that long wick candle and you say, oh, I might not want to take that trade, so you don't get in. But then look what the market does: nice big candle. All right, so you can never tell what the market's going to do. The market's going to do what it's going to do. You just have to play by your rules, by the rules that you have. And then we see how we attack after we broke this level, how we attacked this level again with these small candles. Nothing really aggressive, but then you could see how we pulled away with a big candle, quite aggressive. Now it looks like the momentum's dying out based off of your Kijinsen and your Tenkan-sen flatten out. Both of them are flattening out, but pretty much everything is bearish here, so that's why I'm in the trade. I got into the trade after I saw this bounce off of this level, got in here, put my entry a little below this level here, right below the fractal level there. And then when price broke that fractal, we had a nice long candle here. My stop loss is all the way up here. Now the thing is, if we get up here, break above the Kijinsen and close above it, I won't wait for the market to take me out. I'll get out of the trade, because a lot of times this is your trend line. Okay, your Kijinsen basically acts like your trend line. If price breaks that level, then you usually have a change of trend. Now that's not all the time, but that's something to look for, especially when you're on a really really good trend. If you're on a trend upwards and then price breaks that level, then it goes back down. So that's where we entered the market. I expect the market to pull back and come all the way back up to this level, maybe test that level, maybe even break up against that level and bounce off of the Kijinsen and pull back. Always know that your level where the market can pull back to is going to be your Kijinsen. It's always going to be like the magnet pulling your market back to equilibrium. So just know that all the time. That's a big thing to remember. You can see how the market's attracted to the Kijinsen. Look at all these levels here. Look at how the market, what it did around that level. Look what it did around that level here. All right, and then we got away from that level. Now it waited, and the market got closer, and then it took off. Now it'll wait. The market will get closer and take off again. All right, so that's U.S. dollar, Swiss franc, 4-hour time frame there. New Zealand dollar, U.S. dollar on the daily time frame, and you see a nice big candle here. Just broke right through this support level. The first couple times it bounced off of it, but the third time broke right through it. Okay, so this is your previous month's high level. Broke back down below that level, but you could see the Kijinsen. The Kijinsen, daily Kijinsen, is holding support right here. And this is where the market came back down to the daily Kijinsen. All right. So that's the level that we're going to be looking at. We could look at that level when we go to the 4-hour time frame and know that this is strong. Now we're going to stay, our bias is going to be bullish until we break below that level, and then we'll wait and see as we attack the cloud if we even come that far. All right, but right now we're concerned with this level right here. So let's go to the 4-hour time frame. And now if we're looking for something long, we're not going to take the bounce. If we play the rules like they're designed to be, we're not going to take anything that's inside the cloud. And that bounce off of that daily Kijinsen is putting us inside the cloud. So we'll want to get above that cloud. And more than likely it'll be nice to get above that Kijinsen. That'll let you know that the market's direction is more bullish. While you're below that Kijinsen, that's showing you that it's a chance that there's a possibility of a change of trend. So we want to get above that level, and really we want to get above this level here. So this all lines up with each other. This previous month's high, the Kumo cloud, top of the cloud, and this Kijinsen, they're pretty much in the same area, and the price needs to get up above that level before we can go long. Now if price breaks below this level and falls below, we're going to take the trade based off of the 4-hour market, what the market is telling us on the 4-hour time frame, because things happen on the smaller time frame first. The trend starts on the smaller time frame first, but we get our bias from the larger time frame Okay, so if you could get into a small trend, it'll be a nice trend on your 4 hour time frame, but on the daily, it may be just a small move or a small pullback. Okay, so we'll always listen to our rules. If we break this level, which would be nice, okay, because the daily Kijinsen sitting at 83.69, we break that level, we'll also break the cloud here, and then we'll look to shoot down to the previous week's low, which that level came in at 82.72, right at the bottom of the Kijinsen, of the Kumo, as you see. So that would be a level that you would shoot for. But other than that, we're going to wait for price to tell us what it's going to do. Is it going to go lower, or is it going to go tack back upwards? So we'll wait on that. You still have there's a trading opportunity once that breaks and closes below, or wait for it to move upwards. Pound Aussie on a daily time frame. This is a very nice market. You could see this move upwards. Okay, the market moved up. Now the thing about this market, we moved all the way up here. Now we can expect maybe a pullback. So let's it's showing signs of pulling back. You have this top, this double top almost, and then now the market's pulling back. We got to change the trend direction, breaking the Kijinsen, and now on the other side of the cloud, definite change of trend. So we're looking for the short bias. So we want to see where the opportunities may rise. Okay, so if we took this short, there's opportunities, you say maybe 38.2 and 50% and those levels. So you'll take this down to this level, 50% retracement right here. All right, so we want to see price get below this level first. Now also we could find two things. Market may also, of this move here, this prior move right here, the 50% retracement of this move will be to the daily Kijinsen right here. So there's a possibility that price can pull all the way back to that level. Now then also here's another level. So you have to see if you break these levels. The bottom of the Kijinsen where we're holding resistance right now. All right, so that's this level right here, this light blue line, this one right here. And then you got, that comes in at about 68.11. And then you got your next level, which could be your bottom of your previous month's low. And that comes in roughly about 68.72. And then the cloud and the Kijinsen are going to be in that same resistance level area between 1.7 to 1703. Okay, so that'll be your other resistance area. So if price moves up that far, then you know that this is where you're going to look to go short, with a stop loss above the cloud. All right, so we want to see if price breaks, violates this level, and then violates this level to move up to this level. If not, we're going to look to go short. Now going short is going to be tough. If you don't get the trade here, you're going to have to wait to break this level. So let's go to the 4 hour time frame and look at that. So basically on the 4 hour time frame, you could look at this and watch, see what the market's going to do. Now if you break above this level here, we want to take this long, because we're going to play the rules on the 4 hour time frame. All right, so we're going to, like I said, things start on the smaller time frame first. So you get into that trend first with the 4 hour time frame, and that could be a small move just up to this level. All right, but we can take a breakout to that level and then see what the market's going to do. If the market doesn't honor this level, violates that level, then where will it move up to? Keep on moving and maybe move up to this level. And we go back to the daily time frame. Well, actually we don't need to, because I told you this was going to be the top of that cloud. So if you break this level, be aware that this from the 1.7 to 1.703 level is going to be the top of the daily cloud, the bottom of the daily cloud, and that's going to find resistance for you. So if you're taking a long trade, then you're going to know that that level is going to be a level where you may find strong resistance. Okay, but the market needs to get through all this first. It needs to get through the cloud first. And if not, if it doesn't get through the cloud, we come back through here. If we get below this, we'll take this short. Wait to come on the other side here, take this short, put your stop loss above this level and let it ride. If it goes down to here, bounces, then you made a nice little profit, but your possibilities of moving lower are good, because if we look at that daily time frame again, you can see what the market looks like. We could be retracing, getting down to that 50% retracement level. All right, so New Zealand dollar yen, pretty much again, you could see the markets moved up, almost had that double top, almost not really a double top, but hitting that level twice. So we came up to this level once, and then came up to this level again. This level is the top of your monthly previous month high. But then the market shot way down, and then now we want to see if this level is going to hold. Is this level going to hold as support? If so, then the market's going to move back up. So let's go to the daily, to the 4-hour time frame, and look where we are right now. We're getting far away from the Kijun-sen, so that's going to be, the market may want to pull back and wait on the Kijun-sen to get back into equilibrium. All right, so but even though we still play our rules, so right now there's no trade. We broke out of the cloud. There's not a trade because I'm not going to enter the market on this. I want to get either the market to pull back to this level and show me that this level is holding and then enter, or else wait for the market to show me that it's breaking and closing below this level and enter on that. Okay, but getting away from the Kijun-sen, we're always going to want to pull back to that. That's like the magnet. It's going to pull the market right back to it, get back into equilibrium. So I'm not trading anything on this right now, but that's what I would look at. Pound, yen, daily time frame looks like the same thing. You can see up here this level's holding. What's the market going to do? It's going to start ranging quite possibly. And this is a daily time frame. So you see your daily Kijun-sen right here again. All right, so that's going to come in at like 157.36, 38, somewhere in that level. So that's where we are right now. Price is bouncing on that level, and it looks like that level may hold. So we want to see what that level looks like on the 4-hour time frame. And now this would be a nice trade because you had this move here, then price pulled all the way back. So let's see what that, if that is what kind of retracement that is from this level to here. It's a little more than a 50% retracement level, right in that area though. So the market pulls back to that level and see if it holds this level. If it holds this level, closes up above the cloud, then we want to get back into the market, take this long again, and put your stop loss below these candles, right below that fractal level there. So we'll wait to see if the market could get above that level, take it long, put your stop loss down here, and then definitely once we get on the other side of the Kijun-sen, that'll tell us that we're changed back to pretty much a all bullish market. But once price gets on the other side of the cloud, that's our main signal to go ahead and go. All right, so that's on the 4-hour time frame. Looking at that, the pound US dollar, and you can see the market doing pretty much what it does all the time. It shows me the same thing. We come up on a nice move, and then we get into a good trading range. The market develops a range and stays in a box pattern up here once we get to the top, and then it finally breaks out or breaks above. And we could see our daily Kijun-sen. Let's put a line here. That's always going to be a level that the market can pull back to, that daily Kijun-sen. So we want to see that on the 4-hour time frame. So let's go to the 4-hour time frame, and you can see where we are. I don't really like anything about this market. So I don't even know why I'm showing you it, because I don't like anything I see, and I probably wouldn't mess with it. I wouldn't mess with this. So this is pound dollar, 4-hour time frame. You see where we are. Market's up. I'm not too confident about it right now. We're on the other side of the Kijun-sen, and the price action has been a little bit all over the place right here lately, with this move and then that move, and then I guess the news did this. So we just want to wait to see what the market does, let it cool out and get back to normal. Now here's the last pair I'm going to look at, US dollar on a daily time frame. So far I'm not trading this pair because this pair has burned me three trades already in the past few weeks here. I've been getting into 3 trades with this market, and each time it's burned me. I got stopped out every time. So here I thought the market was going to continue higher. On the 4-hour time frame it looks a little different, but I thought the market was going to continue higher and go back to this level, because you could see what it's doing, hit that level, this level, that level, and then get back to the top of this symmetrical triangle. But no, it didn't do that. It faked me out and came back. Now it looks like it's coming back to the bottom of this symmetrical triangle. Now if we break that triangle, definitely want to take this short with the triangle as your support level. support and resistance level. Let's take this to the 4 hour time frame. And here's where the market's killed me. Here's where it got me. I thought I took the trade when it broke above the Kijinsen here, and then the market did this to me. I thought it was going to continue higher to attack this level here, so I was wrong there. And then it's broken below the previous month's low, so it's getting weaker. So this yen is getting weaker than the dollar. The dollar is getting a little stronger than the yen here, so we see this drop down. This is going to be your level that you're going to look at. So that horizontal level lines right up with the bottom of the symmetrical triangle. And if we break that symmetrical triangle, then I think we'll take that short. But the way the U.S. dollar yen has been with me lately, I'm trying to stay away from it. It's tore me up the last few times. All right, so that's really it, traders. That's all I have for now. I really like this pair that I told you right here, the U.S. dollar Swiss franc. But we never know. We just want to play the way the rules tell us and see what happens. All right, traders. Hope that helped you. And until next time, God bless. So long.